And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good afternoon, my futures friends and family. It is time for the reflection. End of the day today. Still Wednesday, April the 12th. Kind of a long day, interesting day, of course, they always are. We've got the equities closing lower after the CPI numbers today. Was it a big day? Debatable. CPI numbers we've had in recent past have been much bigger and much more volatile than today. That's why in the title I put digestive CPI day. Took all day for this market to finally find some sort of direction, and I don't think it was until after the FOMC meeting when it finally did begin to extend the range to the downside. Now, I didn't get a chance really to look at what was really said in those FOMC meeting minutes, but I did see that there was mention of recession, and that word alone, I think, probably put a chill into the markets and had us closing lower on the day. Other than that, I mean, we had some excess at the high, we had excess at the low, we had some ranging activity. There was a ledge on the upside in the profile that probably isn't going to last for too long. Got to see what happens with this PPI number tomorrow. And, you know, when we look at the CPI numbers, the core CPI still seems to really not have budged much, but overall CPI, the CPI, you know, it did come off a little bit. It's still inflationary. It seems to be slowing. So with all this on the mind of traders and investors, it kind of seems like, you know, as long as it's fresh in the mind, they're gonna, you know, probably be looking to sell, which they ended up doing at the end of the day today. But as that memory kind of fades with no new bad news, at least for another 4 weeks until the next FOMC meeting. It's the first week in May, so almost 4 weeks, I guess. We'll just have to see how these markets respond. I mean, the S&P's closed down 15 points today, not a big deal. 0.4%. The NASDAQ down 118 points today, 0.9%. And the Dow down 33 ticks, 0.1%. I mean, not a big loss today, although, you know, the market, you know, kind of looking at the chart, it still seems to be putting in higher highs, seems to be putting in lower lows. Again, we'll have to see what happens tomorrow with the PPI and, of course, jobless claims tomorrow. So all of these things are going to be affecting the markets as they always do. And I forgot to introduce myself. My name's John. Thanks for trusting me with your time this afternoon. It's always good to just kind of sit back, relax a little bit at the end of the trading day, think about the day, think about the good things you did, think about maybe some of the things you did that didn't work out for you, and take a look at the charts. You know, think about what might be coming up for us tomorrow. I don't think we really put a late spike into the S&Ps. Some kind of upside things were kind of left unfinished today. So, I don't know. We have to see what the markets do in the overnight and see what happens. Good afternoon, Rooster. You were up $2,000 at one point and ended up the day down 500. That's a big swing, my good man. That is a big swing. Can I make a suggestion for you? And I've made this suggestion for a lot of folks that I've worked with. You know, you're up $2,000. You want to be, you pretty much want to make sure and guarantee yourself that by the end of that day, you're going to be a plus player. You take another trade, it's a winner that buys you another trade. You take another trade, it's a winner that buys you another trade. But if things start going against you, things start going wrong, if $2,000 is a good day for you, well, you may want to think of a percentage of that you're willing to risk to continue to keep trading. If you're up $2,000, what's wrong with, let's say, 40%, risk 40% of it? That's $800. You're still going to be a $1,200 winner at the end of the day. You're still going to get to participate to possibly earn more. But at some point, you want to guarantee that you are going to end the day a plus player. And the bigger the day, the smaller the percentage that you're going to risk. The bigger the win, again, the smaller the percentage of it you're going to risk. You may be risking more money, but a smaller percentage of the high watermark of that trading day. You're up $3,000, maybe you risk 30% of it. You're up $4,000, maybe you risk 25% of it. You're risking more money, but a smaller percentage of what you're up. Yes. Because, it's one thing to lose the money, of course. That's what we're all here to do is to make money. But the mental capital and the thing that does to your emotions and your mental capacity and your ability to continue to move forward tomorrow, it's that takes a lot out of you. I mean, even winning days take a lot out of me. But a lot less than losing days. And, believe me, I've done it. I've done it 100 times. I had a really good day going and blown it and lost a lot of money on days like that. It's just too brutal on the mental capacity, on the mental capital, if you will. Don't do that to yourself. When you're up good, make sure you're going to end the day up money. George, Lacey is still snoring on the floor right in front of me here. She's got the life being the center of the universe. Haggle Matters, good afternoon. My brother Rick is with us this afternoon. I don't really see you this late in the day. It's good to see you, my man. Gear, good to see you. J-Man, Will came out ahead today. Pretty sure the market is going to contest those recent results, though. Well, it always does. And whenever you get the right answer, the market's going to change the questions. And all of those paradoxes, they come at you every day, right? You had a good day today. Good. Start from zero tomorrow. JT, good afternoon. Good afternoon, Bluebell, too. J-Man. Made a real money at my real job today, right? Rooster, my pleasure. Edward, good volume on some of these daily down candles. Well, the volume usually does come in stronger on down days. Everybody likes to pile in and make that fast money on the downside. It's one of the reasons the market likes to grind higher is because it eats shorts. Edward. Yeah, I'm not. We'll take a look and see what the volume looks like on the daily here in the S&Ps. You're talking about the QQQs. Even though I went 0 for 9 today, I only lost $114. That's good, J-Man. My goodness, Julian, hello. A wise man. That's right, Rick. A wise man once told us, money is easy to make, easy to lose, harder than hell to keep. 100%. That comes from our dad. Brett nailed a $300 NASDAQ trade in the last 5 minutes to finish just over $1,000. That's a great job. Great day, Brett. Awesome. And Bluebell says, hello, Bluebell. Love that bird. All right. So I was kind of, going to be looking at some of the things that they were talking about here in the FOMC minutes. Several participants mentioned that they were debating whether it would be appropriate to keep rates unchanged at this last meeting. Several officials considered whether to pause at the March FOMC. There we go again. A lot of them stressed the need for policy flexibility. Of course, there was a lot of talk about the developments in the banking sector, creating tighter credit conditions, weighing on activity, hiring, and inflation. Fed officials lowered their views of the rate peak following the bank strain. And I think the biggest one that sticks out to me is the first one that I see here is Fed staff projected a mild recession starting later in 2023. And I'm hoping that that's all it's going to be, just a mild recession. Hello, Frederico. Let's jump in and take a quick look through the charts here. We had, yesterday was such an important day in crude oil, and I don't like to say I told you so, but I told you so. There was opportunity off that weekly kickoff low yesterday, one way or another, and it continued to the upside, trading to and above the weekly kickoff high today. Let's take a look. So we're coming into rollover, which is one thing I don't like about crude oil is when it's in rollover, right? We think all the longer time frame traders are going to be focusing on something else. The EIA came out today, and it was a little bit, where is it? It was a little bit higher than expected, but we're talking a difference of 1 million barrels. It was a 500,000 barrel draw expected. A 500,000 barrel boost was the actual. So how big a deal was that? But yesterday we were at a weekly kickoff low. We could not accept below it. Rejection had price moving higher. The May contract lost 23,000, but overall there was zero change in open interest. So the future months saw a boost in open interest on this move to the upside yesterday. Here's the 30-minute chart. Here's the weekly kickoff low yesterday. Within 4 ticks was the low of the opening range, the low of the regular trading hour session. The market waffled all night, opened with a gap, couldn't close the gap, and continued to trade to and close above the weekly kickoff high, finding support there a couple of times in very short time frame. Another long, almost a double distribution trend day. We had a double distribution trend day with a move to the upside. Another similar, but not quite as full of momentum. We'll see what it looks like tomorrow, or where we open if we're above 83.05 or below. Another day with the initial balance at the lower extreme. Here's the S&Ps. Here's the daily. Still in range, still in balance. Took a look above weekly kickoff high. No acceptance. That was prior to the open. We tried to get back up there. We failed to do so. Market comes back and then continues to accelerate lower as the day goes on. Here's the 30-minute chart. Opening range looks higher. Doesn't find anything to do up there. Turns around, rotates lower. Here's the ledge we're talking about. This is really kind of a weak level. This is a mechanical level where short time frame traders are probably taking shorts there, and they got paid for it today. Usually these levels have big bunches of stops above them, and they get taken out. We'll see this better on the TPO chart just to show you. The market was largely range-bound the better part of the day. We had excess at the high. We had excess at the low. After the FOMC meeting came out was when we started to see some potential acceleration to the downside. What? Here's the TPO. That's not the TPO chart. That's the TPO chart. So here's our overnight. Here's our opening range. Looks lower, can't continue. Rotating lower, leaves excess on the low, rotates back. Here's that ledge we were talking about. These ledges can be tricky. I was really kind of thinking about looking for a potential short if we were to take out all the stops up here, which we never got the chance. So we've got this kind of weak high level here. Exactness in profile indicates weakness, but the market did continue to try and push lower. No late spike. No late spike. All right. NASDAQ, which is a completely different market and looks to be so. Here's the S&P, here's the NASDAQ. We're closing testing that low of that area of balance. I mean, this has much more of a downside hint to it. And we closed right at last week's low. This is going to be an interesting day tomorrow. There it is. And again, the market opens, looks higher, rotates. After the FOMC meeting minutes come out, the market starts to look to the downside. Here's the TPO chart. Opens, looks higher, fails, comes back, rotates, and continues to the downside. Looks like maybe, there's no late spike here. No late spike in the NASDAQ either. I think when we look at, hang on one second, I want to show you something here. It's not going to show you. Hang on. Cumulative delta line, session 8. Let's see if this presents correctly. $28,000. Yep. Yeah. So let me get rid of this. Yeah, goodbye. So all of this, look at the negative delta. All sellers, all shorter time frame sellers. I don't think that there were longer time frame sellers here today, which is a little concerning for continuation to the downside. Very negative delta. That's shorter time frame traders using market orders to hit bids. A little bit of concern for us for tomorrow. How about gold? So the dollar really got whacked today. So we've been holding this line. The overnight, we put this in. Didn't really take it out. What does the 30 look like? I didn't really give gold much of a look today. Now, this bull flag isn't really finding momentum here just yet. Even with the dollar getting its butt kicked. Excess on both sides, it looks like. What's the profile? Excess. IB high is the high of the regular trading hours. Long liquidation. How do we end up long? Well, maybe just overnight inventory. Overnight inventory long. Yeah, S&P does have a weak low as well. That's true, Will. Thanks for pointing that out. Here's the 10-year. When the CPI came out, rates really went for a ride to the downside. Appears they've recovered. Let's bring this up here. Just right down to that trend line. It's been holding that line. Here's TPOs. Excess and excess. I don't think we're probably going to see that big a change in open interest in the 10 years tomorrow. And look at this. Not giving much heed to our reversal pattern down here, are we? Here's the 30 again. It's going to be a double distribution trend day. Double distribution trend day, week high. Maybe a little bit of a late spike. Again, week high. Kind of a weak high here. And we'll see what these look like in the morning. I'm too tired to think about it now. Too tired to think about it. So did you know that, I did not know this, April 12th is the day the Civil War began. Confederate forces fired on Fort Sumter. Bill Haley and the Comets recorded Rock Around the Clock today in 1954. First space shuttle, Columbia, launched for the first time in 1981. And whose birthday is it? Tiny Tim. Tiny Tim's a big winner with the Tiptoe Through the Tulips song. It's Herbie Hancock's birthday today. Happy birthday, Herbie. David Cassidy from the Partridge Family. It's his birthday today. David Cassidy. And these young ones, I don't even know. Something in Led Zeppelin history here, though, that happened. Where was that? So in 2016, the U.S. court ruled that Led Zeppelin founders Robert Plant and Jimmy Page must face a trial in a copyright row over the song Stairway to Heaven. The copyright infringement action had been brought by Michael Skidmore, a trustee for the late Spirit guitarist Randy Wolf, who played on the same bill as Led Zeppelin. He claimed that he should be given writing credit on the track. They lost, not Led Zeppelin, the copyright infringement against Led Zeppelin failed. They did not have to pay. And I listened to the song. It's a song with Spirit. I can't remember the name of the song. It's nothing like nothing like Stairway to Heaven. Maybe a similar chord structure, but I didn't hear it. And apparently the judge didn't either. So tomorrow, we are looking for that's not what I'm looking for. Jobless claims PPI final tomorrow at 7:30 a.m. Central, followed by Nat Gas at 9:30. Now I'm going to take a look here and see. April 13th. I know somebody whose birthday that is. I don't see any talking feds on the schedule for tomorrow, which is kind of unusual, but hey, I'll take it. I'm going to let you get down to your evening now. Have a great evening. Make sure, be kind to yourself, be kind to others, say a prayer for peace, and get some good rest tonight. It could be another interesting and challenging day tomorrow, but again, aren't they all? ACH, ladies and gentlemen, anything can happen. A wonderful evening, and I'll see you in the morning.